So in this video, we're going to talk about HP or HPQ, and they announced earnings late last week. The stock went down 7% or $2.26 as they guided for a weaker outlook. And as a result, if you scroll up to this weekly chart, this daily buyer's level could no longer hold. Now, how was that level created? Let's go back to the daily chart. We have this rallying price, we have these basing candles, and then we have a gap high on earnings, and price came in not once but held a second time, and for the latter several months was range bound until the strong imbalance between sellers and buyers on the news. Now, before we continue with the analysis, let's look at the actual results. So HP on Thursday delivered softer guidance for the current quarter, warning that the U.S. import tariffs on China would drive up its costs. Now, for the fiscal second quarter, HP expected adjusted diluted net earnings per share to be in the range of 75 to 85%, or 80 cents at the midpoint, compared with expectations for 85 cents. HP's outlook reflects the added cost driven by the current U.S. tariffs increases on China and associated mitigations. Early in the week, U.S. President Donald Trump said he would place an extra 10% levy on Chinese goods on March 4th, on top of the 10% duty he previously imposed on February 4th. Now, the company said it had made efforts to lessen its dependence on China, saying it expects more than 90% of the HP products sold in North America will be built outside of the country by the end of 2025. HP has been proactive around building inventory ahead of the tariffs, which will help mitigate the impact but does represent a near-term free cash flow headwind. Now, the softer guidance offset fiscal first quarter revenue that topped estimates thanks in large part to the growing demand for HP's AI enhanced offerings. All right, so let's go back to the charts. We're going to take this daily buyers level off the chart now because we did get a weekly candle close below that level. And the question is, where will price head next? Well, if you look at the daily chart, you can see that there are really no levels of interest where buyers are willing to step in, minus this gap here at about $30. And that's probably why you had the reaction where prices closed off the lows for the week. However, the best buying opportunity where the liquidity is at, consider this leg down or leg up, just one extended range green candle. And where is the level of interest where the buyers are willing to go all in? That's going to be down at this weekly buy level at $27 and about 40 cents. And that level was established from this rallying price, got a basing candle, and then the rally out. Price dipped its toes into the zone not once, but a second time. And because price did not penetrate the zone more than 50%, this zone is still valid. So the charts are suggesting if price can go down another $5 or so, that would be a great opportunity to go long. Thanks for watching. Subscribe. Please like the video.